Let's welcome Kevin Hassett. He is Senior Economic Advisor to the President. And Kevin, let's just start, first of all, talking about what the Fed chair said yesterday, what you are thinking about the economy right now.
Right. Well, I think it looks to me like the activity is picking up. You guys have been covering it, that it looks like it bottomed out about the 11th or 12th of April. And at the real-time stuff that we look at, like the number of businesses opened and things like that, it's really gone up quite a bit because the economy's getting going again. And so I think that the question is not really like when does the recovery start, because, you know, absent a second wave of the disease, it's kind of already begun. You're already seeing a pickup. You know, the question is how long does it take to get back to January, right, that level of GDP? And I think that definitely you're looking at a very strong third quarter, a very strong fourth quarter, and probably a great next year. And so I guess I disagree that it's going to take all the way through the end of 2021 with Jay. Finally, he mentioned that we need to avoid bankruptcies with our fiscal policy, and that's exactly what we've been doing. And you had that good news about the vaccine plan when I first plugged in. And imagine if, you know, God willing, the vaccine were to come out relatively quickly, then I think all of you guys would be really confident that the economy could get going again and start roaring again right away. The question is, how long does it take to get to that point where everybody's comfortable getting back to work? And I think that the longer it is, you know, the more Jay's going to be worried, and the shorter it is, the more we're going to believe that the stuff that we already did was enough to get people across the bridge to the other side.
Yeah, Chairman Powell did say, you know, it might take until everybody can get a vaccine, a needle in their arm with this, for the economy to really get back where it was. It's fantastic news if that happens sooner rather than later. But we should probably point out that even if this vaccine is moving along as quickly as we think it is with Moderna, that you are still talking about months and months, an extended period of time. And I guess how well do you think we are positioned to continue to make sure that some of these unnecessary, avoidable insolvencies don't take place? How long can you continue to support businesses and continue to support Americans?
Well, you know, the Fed and the Treasury have a massive amount of money left in their Main Street lending program, which is designed exactly to do that for sort of big firms. And for small firms, the PPP small business loans are also, there's still a lot of money left there. And so I think that the two main projects that we put together, a couple of months ago, to make sure that firms had the liquidity they needed to sort of get to the other side, that they're still working and they still have money. And so, you know, if the economy recovers slower than we expect, then, you know, it's possible we'll have to put some more cash in there, and we stand ready to talk about that with Congress. But right now, we think you should monitor the data and look and see, like, what are the burn rates of those things and so on. And frankly, when we do that, we're actually seeing a lot of encouraging signs.
You know, Congress has moved in a bipartisan manner to pass, what is it, 3 bills that we've gotten so far? But this fourth one, there does not seem to be much common ground on. There's a lot of different ideas about what money should be spent, or how that money should be targeted. Maybe one of the big ones that people are focusing on is the state and local municipalities. What do you think about potentially sending money to those states and municipalities that were hardest hit?
Right. Well, where the White House is right now is we're kind of in wait-and-see mode as we watch and see what happens. How quickly does the economy pick up again? How does the money we've already spent, you know, how does it run out, or does it run out? I think that we're also working closely with, you know, a lot of Democrats. We've had a lot of moderate Democrats on phone calls over the last few weeks where we've talked about their policy ideas. And so I think that we stand ready to take, you know, very strong action if we need to. I just doubt that in the end the product is going to look much like what Speaker Pelosi put out last week. The final thing about that is just that we understand that there are a lot of state and local governments that are really running out of money because economic activity is so low. And that's a really big ask for the Democrats. And, you know, President Trump has stated that he doesn't want to bail anybody out, but he is willing to study COVID-related expenses and potentially talk about them.
But COVID-related expenses, I guess it depends on how you define them. If the economy is shut down in a particular area because you have such a high number of cases that are out there, and you basically tell people you can't go to work and you can't go to school, and we have to shut this down to make sure that this doesn't spread not only here in this community but beyond this community, how do you measure what's a COVID-related expense if sales tax is dropped and plummeted, if you're not getting all kinds of money that you would have been taking in from all of these different things that had been happening in a working economy before? How do you pay for teachers? How do you pay for police officers? How do you pay for firemen?
Well, we've already given states, a lot of money, and Secretary Mnuchin has given guidance that the COVID-related money could be used to fund first responders. But you're exactly right. Like, I shouldn't have used the word expenses. I should use the word costs, because in the end, if there is another bill, then people are going to really focus on what are the real costs to state and local governments of what's happened, and those could easily include the kind of things that you were talking about.
Okay. Kevin, you were talking about how the economy does seem to be coming back, and Greg Ip had written over the weekend in the Wall Street Journal about how some of the other things you look at, like retail visits, maybe down 50% in April year over year. Now they're only down by about 32%. If you look at some other things, just like people using Apple devices, map requests on those, they were down 50%, and now they're only down by about 20%. So it does sound like people are coming out and coming back.
Yeah.
What
it's
are
just
the
what we're
types
seeing,
of metrics that you're watching to see? Yeah, what are the metrics
Yeah.
you watch to give you the best real-time information?
We've got that. We've got, some private companies share their data, like their billing data with us, so we can sort of see retail activity. There are a lot of indicators that we have that we can look at, and some of them we're not supposed to, as part of our deal with the company, say the name of the company. But definitely you could track like how much foot traffic there is into businesses, the retail visits. We got social distancing metrics that show that people are kind of hitting the stores again. And pretty much the numbers that you mentioned are about what my guess is, that we're about 50% shut off at the beginning of April, and we're about halfway back right now.
So of all the numbers that you've seen, what are your biggest concerns in terms of what geographies and in terms of which industries?
Oh, I think the biggest concern, of course, is travel and leisure. And if you look, like, one of the economies that's hardest hit is Hawaii. And, Hawaii, I think that the claim, about 33% of the labor force is on unemployment insurance claims now. And of course, there luckily hasn't been a lot of disease in Hawaii, but the economic turndown has really affected them because people don't fly to Hawaii for vacation. And so that kind of thing is probably going to take a long time to turn on. And I think that places like Hawaii and Nevada and so on that really depend a lot on travel dollars will be the states that continue to be hardest hit even when the economy gets going again.
It sounds like the rhetoric between China and the United States is picking up again. We had a representative from Huawei who was on an hour ago, and he said that if the United States goes through with these measures to try and punish Huawei, that it will really be the American worker that suffers for that. Do you have a response to that?
Well, I think that, it's something that we're studying. It's underway, and, Huawei is a company that the president and the team have a lot of concerns about. And, I think that there are probably better ways to get to 5G than using a Chinese company that doesn't exactly have a stellar record of respecting privacy and so on. But you're right, the tensions are high with China right now. But, I think that we just have to wait and see how it turns out. That I saw Ambassador Lighthizer was mentioning that they have been sticking to their trade deal and so on. And so we're watching things closely. And I think so far it looks like the deal that we made right before the COVID outbreak is being adhered to by the Chinese, and that's a positive sign.
Some of the messaging that we were hearing on Friday that was kind of being delivered through one of the not state-run medias, but one of the media there that's very close to the Chinese government was suggesting that there would be retaliation, that they'd do things like stop buying Boeing planes if this went forward and punish companies like Apple. What do you say to that?
Yeah, I think that it's likely that if we, take a move that they'll retaliate. That's something we've seen over the last 2 or 3 years. But I think that the leverage that President Trump gained early on really delivered a great trade deal with China. And I think if you look at the USMCA deal, the new NAFTA deal, that also is a much improved deal. And so I think that there have been some tensions, trade tensions, but they've brought us to a pretty good place as of January. I think that the virus is kind of like a complete reboot of the relationship, because there's so many questions that we need to have answered before we can really understand what China's role was in potentially covering things up and so on. And it's something that I know the president's very concerned with.
The president has pushed the idea that he would like to see negative interest rates here in America. Jay Powell, to this point, the Fed chairman, has said that he's not interested in that. We just heard from Mohamed El-Erian a little bit ago, and he said he'd be very concerned what it would do to the economy if we actually saw negative interest rates here. Do you have any thoughts on what it might mean for the economy?
Well, I think that the thing to remember is that, in January we had about the strongest economy on earth. We had interest rates that were, well above zero because the economy was really chugging along, and it sort of created this luxury almost for the Fed to get rates up into a sort of safer zone away from zero. And I think even with this massive hit, we're going to have a second quarter decline in GDP that's historic in its size. I think that the Fed has responded really aggressively, but they haven't had to go into negative rates. And so my hope is that those activity things that you and I were just talking about, that they really start to be visible to markets and visible in the data, and we all get really quite confident that we've hit bottom on this thing. And I think if that's the case, then probably the Fed won't have to do much more with interest rates. But again, I don't want to give them advice. I respect their independence.